Hello, everyone, and welcome back to the series of videos that explain how to use the financial statement and analysis spreadsheet system. This spreadsheet is part of the University of Wisconsin Division of Extension's Farm Pulse program. The full curriculum and the spreadsheets themselves can be found at the website addresses that you see on the slide. My name is Kevin Bernhardt, and I'm both a farm management specialist for the University of Wisconsin Division of Extension, as well as a professor in the School of Agriculture, teaching in the agribusiness area at UW-Platteville. In this video today, we're going to talk about how to handle the income statement entries for breeding livestock sales or expenses, as well as the gain or loss from the sale of capital assets. So let's get started. Breeding livestock is an asset that is really hard to classify. We don't know quite what it is. Is it an inventory item, like, for example, purchasing of feeder cattle and then fattening them up and later selling them? Is it that kind of thing, or that kind of asset? Or is it more like a capital asset, like a tractor, for example, that you purchase and you depreciate it out, and its purpose is to put it to work, to create the kinds of things that you're going to sell, like milk or feeder cattle or feeder pigs or what have you? Well, the Farm Financial Standards Council recommends number 2 on the screen there. And that is to think of breeding livestock more like a capital asset, more like a tractor, more like a building, more like land, one of those things that you put to work to raise the stuff that you're going to sell. However, there's some peculiarities about breeding livestock that make it sometimes seem more like an inventory. For one thing, the rollover of that particular asset is a constant thing. So if you think about a dairy herd, for example, you're rolling over 20, 30% or whatever of that herd every year. So that's an ongoing thing. It sounds sort of like an operational activity. So there's a lot of confusion about how to classify breeding livestock. And of course, that confusion then carries over as well to how we treat it in the income statement. So let's get our arms around this. First of all, there's lots of different parts here, and that's one thing that makes it difficult. So for example, we have 2 different kinds of income statements, and how breeding livestock is treated is going to be different on each. So we have the cash income statement, we have the accrual income statement. We also have the different sections of those income statements: operating revenues, operating expenses. And because we're talking about something that's sort of like a capital asset, we may have gain or loss on the sale of those capital assets as well that we have to deal with. And finally, of course, we have 2 different kinds of breeding livestock. We have breeding livestock that we purchase, but we also have breeding livestock that we raise from a brand newborn. So those have peculiarities about them. So each one of these things, there's lots of crisscrossing lines and lots of confusion sometimes on how to handle the income statement entries for breeding livestock. So again, let's get our arms around that. The next 4 slides, each slide is going to cover one of these blocks that you see. So we're going to break this problem down into looking at the cash income statement for purchase breeding livestock, and look at the accrual income statement for purchase breeding livestock. And then we'll switch over and look at the cash and the accrual income statement for raised breeding livestock. So we'll treat each one of these combinations as a different challenge. So, and I'll present them here on the slides, and then we'll go to the spreadsheet and see how we actually put them into play. So the cash income statement for purchase breeding livestock, the revenues, any kind of sales that we have, so those cull cows and so forth, any kind of sale that we have, we're going to record that as a regular operating revenue. This is sort of on that inventory type of idea. And the source for that information could be our own farm records, of course, which is ideal. Or we can get that information from a tax form that's called Tax Form 4797, Sales of Business Property. And I will show in a later slide how we use that Form 4797 to get that information on sales of those purchase breeding livestock. On the expense side, we're going to treat that purchase price just like we treat the purchase price of a tractor. So this is where it looks like a capital asset. We're going to take that purchase price, and instead of writing it off right away as a normal operating expense, instead we're going to depreciate that out over the years of the animal. So instead of taking it all in year one, we're going to take a little bit of that out each year for the next, say, 5 years or so of the useful life of that animal. Again, that depreciation expense can be found in our farm records, or we could use tax depreciation from the Schedule F. And we did that in a previous video, but we could look on Schedule F and find that depreciation amount. Now that would be total for all of the farm, but the purchase breeding livestock could be part of that if that's the way we have it set up on our farm. The accrual income statement for purchase breeding livestock, on the revenue side, there's no adjustments needed. So we're just going to take what we had as cash sales, and that's just going to carry right straight over to the accrual income statement. On the expense side, we're also going to use it as depreciation expense there, but a different kind of depreciation. So instead of using tax depreciation, we want to use economic depreciation. And the best source for that, if we're keeping a good depreciation schedule, like we talked about in a previous video, that's the best source for that economic depreciation. Or we could estimate it. Our spreadsheet system that we have also has a way of estimating that depreciation based on a replacement cost. And that it would be found on income statement schedules tab on the spreadsheet, and in particular Schedule 2, which we'll show here shortly in a little bit. For the cash income statement for raised breeding livestock, now let's switch gears to raised breeding livestock and look at the cash and accrual income statement. So the cash income statement for raised breeding livestock, the revenue is going to be treated exactly the same as the purchase. So it makes it very easy. Whatever is on our farm records for all breeding livestock, raised or purchased, is going to go into that operating revenue section. Or we could use, again, tax form 4797 to find that information as well. But there's no difference between raised and purchased livestock in terms of recording the revenue from sales of those animals. On the expense side, remember we're talking about raised breeding livestock. So we have an expense for that animal to get to that breeding herd. That expense is involved in the vet cost we had, the feed cost we had, the labor cost we had, the bedding cost we had, etc. And so those costs they're already a part of operating expenses. And in the way that we're doing it in this spreadsheet, there's other ways to do it, but the way we're doing it in this spreadsheet is called the base value method. So we're just going to leave all those costs right there where they are with the vet cost, feed costs, labor costs, and so forth. We're not going to do anything to try to recapture those somewhere else. We're going to deduct them off our expenses for tax purposes, just like we normally do. So there's no additional recording that's needed. In other words, with respect to the expenses of that raised breeding livestock, we've already recorded those items as part of those vet costs, feed costs, and so forth. On the accrual side for the raised breeding livestock, it gets a little bit more interesting. We do have some accrual adjustments there, and here's where it comes in. So if we've had, let's say, 10 animals that we have added to the herd. So let's say that last year, at the beginning of the year, we had 190 animals. And at the end of the year, we have 200 breeding livestock animals. So we've added 10, and they're all raised. Let's assume these are all raised. Well, that's value. That's a value to the farm. If this farm was to close the doors today, they would get money out of those 10 animals. That's called revenue. And that is a revenue that we want to recognize in the year that it occurred, or in other words, put it on that accrual income statement. We don't have anybody that's paid us cash for it because they're still on our farm. But certainly there isn't a value that's been added to this farm as a result of raising those animals. So how do we make that adjustment to get to an accrual revenue that's reflective of having raised those extra 10 animals? Well, the way to do that is in the line here where it says change in inventory times the base value price. So the change in inventory in our little example we gave was 10. We went from 190 animals to 200 animals. And let's say that the base value that we typically have applied, we want to keep that base value the same for the most part over a long period of time, was $1,200 per animal. So we would take those extra 10 animals times 1,200, and we're estimating that we added revenue to our farm of $12,000, 10 animals times $1,200 each. And we're going to record that in the operating revenue section as an accrual adjustment to revenues. Again, I'll show you this on the spreadsheet when we get to it. We also could have, now this is uncommon and it's controversial, so to speak, but we could have an accrual adjustment for change in the base value price. So for example, what if we decided to change the base value? We don't want to do that very often, but let's assume we do, and we change it from $1,200 per animal to $1,400 per animal. Well, the math for looking at this accrual adjustment is it's not just those extra 10 that are now worth $200 more, but all the other 190 are also worth $200 more. So we want to take the change in base value price, which in this case was from $1,200 to $1,400, that's $200, and multiply it by all the animals that are in inventory, which is 200. So $200 change in base value price times 200 total animals is $40,000. That's a pretty significant amount for this size farm. So that $40,000 goes in as an accrual adjustment in base value price. Now that does not go in as an operating revenue. That goes in the non-operating section of the income statement, and it's called gain loss due to base value price change. It seems a little fictitious, doesn't it? You just kind of willy-nilly change the price. I know it doesn't actually happen that way, but you change the base value price and all of a sudden you got $40,000 more income. That seems a little bit challenging, although if indeed the value of breeding animals has generally raised by $200, then yeah, you do have $200 more. I think the challenging part is you're trying to take that all in 1 year, and that can look a little bit odd. So we'll look at that on the spreadsheet and talk about that more in a bit. Finally, the expenses on the accrual income statement for raised breeding livestock. Nothing different has to happen there. We have the expenses already consumed in the vet costs, the feed costs, and so forth. So nothing needs to change in that case. When we were discussing the revenue from either raised breeding livestock or from purchased breeding livestock, we said we could use form 4797. And the little footnote says here, we're going to discuss that later. Well, now it's later. So let's talk about that. And I'll take you through this on the actual form as well. But here is the formula for it, so to speak. Form 4797 has 3 parts, part 1, part 2, and part 3. And we want to take part 1, line 2, column G, for any items that are breeding livestock, purchased or raised. We want to add to that part 2, line 10, column G, for any line items that are purchased or raised breeding livestock. And finally, in part 3, which would be for purchased breeding livestock only, we want to sum up all those ones that are for purchased breeding livestock of line 24. Now, there's the wording of it. I'll show it to you here shortly as well. And these are used for both the cash and the accrual income statement. Okay, so now we're here back on the income statement. I'm going to go to the top here and let's kind of go through those 4 slides that we had before. The first one is looking at the cash income statement. The cash income statement is in column F in this case. So we're looking at the cash income statement and we're looking at how to record purchased breeding livestock sales. So revenue, we're in the revenue section. And you can see there's a figure there. It's $102,893 for the sale of breeding livestock, both raised and purchased. And that's what we want to see. Where did that number come from? Well, again, we may have it in our farm records. That would be the ideal place to be able to find that number. Or if we didn't, we could go to Form 4797 and see what it is there. So let's do that. Let's go to Form 4797. Okay, here's your Form 4797, sale of business property. And if we went back to the slide and looked at that, the wording of how to find the value that we put in the income statement, it starts with Part 1. So here's Part 1, and a little bit down the page is Part 2, and then on a second page is Part 3. So in Part 1, we want to look at line 2, which is all these ones in this sort of light blue shaded area. And we want to pick out those line items that have something to do with breeding livestock. So we have culled dairy cows, that's breeding livestock. We have bred heifers, that's breeding livestock. And we have a planter. Well, the planter is obviously not breeding livestock, so we're going to ignore that one. So we want to add all the line 2 items for breeding livestock, column G. Column G is to your far right. So our first part of this sum of numbers is $40,000. The second is $46,500. So 40,000 plus 46,500, that's 86,500 so far. And now we want to go to Part 2, line 10, and pick out all those line items that are breeding livestock. There's only one there, and it does happen to be breeding livestock, and that's 3,875. So we're going to add that to our number that we had before. And finally, we're going to go to Part 3. And Part 3 we got looks a little different. We have everything listed in the top here to start with. These are all sales. There was an old baler. There was some various machinery that was sold. And then we had some purchased dairy cows that were sold as well. We're only interested in the breeding livestock, so we're only interested in Part C here, and Property C, and then it switches from horizontal to vertical. Here's Property C, and we want to look at line 24. Here's line 24. Follow that across to Property C, and it's 12,518. So if we add 40,000 plus 46,500, which both came from Part 1, and we add 3,875, which came from Part 2, and we add this 12,518 from Part 3, that's all going to add up to the $102,893 that we see here for the cash income statement for the sale of breeding livestock. Now, that's exactly the same on the accrual income statement as well. So it just automatically carries over to the accrual income statement. Now, the expenses for the purchase breeding livestock, that is in the tax depreciation, because we're going to treat that like a capital asset and depreciate it out, depreciate that purchase price out. So in our case, we come down here to the depreciation line item under operating expenses. And we can just simply go to the Schedule F and get that number. It's $208,208. Some portion of that is going to be the breeding livestock, that the purchase breeding livestock that we sold. So once we get that number, if that's the way we're treating our taxes, then the number is already part of that. On the accrual side, we have to figure that out on our own. Now, we've been through this before in other videos, but we have two ways to do that in the spreadsheet. By far, the gold standard for doing it is having a depreciation schedule. And I'm going to quickly go over to that depreciation schedule. Tab at the bottom, depreciation schedule. We've completed this out. The blue box at the top of it gives the summary totals. And for purchase breeding livestock sales, here we have $2,004 from as part of this total depreciation number of $123,300. If I go back to the income statement, we'll see in the green box here that $123,300. And we also added some capital lease depreciation, but that's where that number comes from on the accrual side for the expense part of those purchase breeding livestock. So it's already there. If we've done a depreciation schedule, it's already there. If we're not doing a depreciation schedule, then we can also get an estimate from Income Statement Schedules tab down here at the bottom again. Click on the Income Statement Schedules tab, and we have an estimate of economic depreciation based on a replacement cost, and that's taken 20% of the purchase breeding livestock per year, or in other words, putting them on a 5-year useful life based on their market value. So this is more of an estimate. In this case, that estimate comes out to $1,796, but we'd only want to use this one if we did not have a regular depreciation schedule. Okay, so that takes care of the purchase breeding livestock. Let's look at the raised breeding livestock. For the revenue side of the raised breeding livestock, we've already talked about that. That's going to be found on the form 4797 along with the purchased, this $102,893 for both the cash and accrual income statement. We don't have to go any further with that one. For the cash income statement for the expense side of raised breeding livestock, that expense is consumed in here in supplies, in labor, in bedding, breeding cost, etc., feed cost. It's already in there amongst those items. We don't have to do anything more with it. We're already set with respect to that one. So now let's look at the accrual side. This is where it gets interesting. We have those different accrual adjustments for revenues. So we will see this in the accrual adjustment part. This is only accrual income statement. We see that it's negative $130,788 here. That's the total accrual adjustment to revenue, where raised breeding livestock is just part of that. So you remember that example we had of the 10 additional cows. This is where you would find that. So where does that come from? That's coming from the income statement schedules, Schedule 3, and here in line 9 on this version, we have raised breeding livestock, change in inventory sales. And what it shows is that the ending, if I can get it here right. All right, we had ending inventory of 460,050 in raised breeding livestock. We had beginning inventory of 474,000. So we actually have a negative $14,350 in this case. We've actually lost some animals. We have less raised animals on our farm at the end of the year than we did at the beginning of the year, because the base value didn't change. So it wouldn't have changed because of price. The base value price was kept the same. So it only changed because we have less animals, and we have $14,350 less in value there. That's lost revenue, so to speak, from those animals that are no longer there. And that's going to be reflected as part of this $130,788 that is on the income statement in the adjustment for revenues, accrual adjustment for revenues. The other one we could have is the one that's very uncommon, the one that's a bit controversial, and it's down here in the non-operating section. It's called gain loss due to base value price change. Now, in our case, it's 0. And the reason it's 0 is because we have not changed the value of the animals. If we had changed, in that example that I gave you earlier, if we change the value of the animals by $200 more, and we have 200 animals, we would take 200 animals times that extra $200, and we'd have $40,000 that would show up right here where I'm circling on the income statement, and it would give us 40,000 additional revenue for the net farm income. A lot of people actually might acknowledge that that's there, but put it outside of the income statement. They might actually have it down below as sort of a footnote to not overly put all that gain in one year, when perhaps that gain was actually a little bit slower than that. It might have been $50 extra value over a couple of years, another $50 extra value over a couple of years. And finally, when you decided to change it, it was a $200 value change, but you're dumping that all into 1 year. So rather than do that, it would be legitimate, I believe, if you just left that out, but you should put it as a footnote though to your income statement as well. Or you could leave it in there as it is in the case of this spreadsheet. But the best thing to do is don't change that base value price very often, if at all. Okay, now I want to go back for one last thing. There's one last line item on this entire income statement that we haven't talked about very much. And that is this line item right above the gain loss for base value price change is another gain loss line item. And it's called gain loss on capital assets other than breeding livestock. So now let's take a look at that. And by the way, I just flashed on that, but wherever there's a red triangle, that means there's some additional information. So if you forgot what that formula was, so to speak, there it is as part of that information. And now what we're talking about here is any gain or loss we might have on capital asset sales like tractors, buildings, other kinds of equipment, anything other than breeding livestock. So we're not talking about breeding livestock right now. We're talking about all those other kinds of capital assets. And here's where it kind of comes in. So if I had a tractor that I bought for, let's say, $200,000, and I get to write that off, right? I get to write that off. That's a operating expense. The operating expense part of that is depreciation over the next few years. That's where I capture that. And let's say over the last few years, I've written off 100,000 of that. So I've had $100,000 of depreciation that I've written off. So the original cost, 200,000 minus the $100,000 of depreciation, that gives me a cost value of that tractor of 100,000. So I still have 100,000 to write off yet, so to speak, right? Well, now I decide to sell it instead. So if I sell it for 120,000, then that means I have actually a $20,000 income because I have 100,000 of expense I haven't written off yet. I not only covered that, but I got $20,000 more. Or it could go the other way around. So that's what we're trying. It's that number we're trying to capture on the income statement when we have a sale of a capital asset. Now it's in the non-operating section because it's not a normal part of operations. We're not normally trading and selling tractors, right? We just do that when we need to. It's maybe this year, maybe not, that type of thing. So it's not typical. It's not a normal operating thing. That's why it's in the non-operating section of the income statement. But here's how we do it. We go back to this form 4797 and we look at those same parts and those same lines. So part 1, line 2, column G, part 2, line 10, column G, part 3, line 24. This was the same areas as we looked at for breeding livestock, but now we're picking out the items that are not breeding livestock and we're adding those up. So now we're back on form 4797, but now we want to look at those items that are not breeding livestock. So part 1, line 2, we got 3 items. 2 of those 3 are breeding livestock. We're going to ignore those, but we did sell this planter, but we actually sold it for a loss. We originally paid $90,000 for it. We've written off $54,000 in depreciation. We sold it for $21,983. That means we failed to recover $14,017 of this planter. That's money out of our pocket, and that's called a loss. So we want to record that loss in the year that we sold it. So $14,017 negative is where we're going to start. We'll go to part 2. Part 2 only has 1 item, and it's breeding livestock, so we don't have anything that's non-breeding livestock in part 2. We're going to go to part 3, and we have 2 things. We have a baler that we've sold, and we have some other various machinery that we've sold. Those are properties A and B. We're going to look at line 24 of properties A and B. And to that negative $14,000 number, we're going to add $3,500 for property A, the baler. And we're going to add $2,017 of income that we received from the various other machinery that we sold over what we had originally purchased it for. So when we add those 3 numbers, we get what we need to enter into the income statement. And in that case, that number is negative $8,500 here under the gain loss on capital asset sales. And that's both on the cash income side as well as the accrual income side. So that does it for those challenges that we've had in the income statement. That also finishes our discussion on how to complete the income statement. So we've come a long ways in these videos. If you've been watching them from the beginning, we've now accurately completed a beginning balance sheet, an ending balance sheet, a cash income statement, and an accrual adjusted income statement. Lots of information. Now we get to the fun part and to where farm management really can start to take place. We want to look at those financial statements and try to analyze and assess what is the financial story that's being told about our business. Better yet, what does it suggest that we should do tomorrow morning after breakfast to improve our financial situation? So that's what we're going to take on in the next video, is kind of how to gather the correct numbers and put them into a way that can tell that story. Until then, thank you for listening.